Hi, I am Anna. I come from www.ntvforex.com. Market players don't believe the U.S. Congress will fail to get a second œstimulusâ spending package analysis. http ntvforex.com News ID 6BC2098112021 01:38 p.m. Outlook. We get PPI today, yawn. The market movers come later in the week, especially retail sales. The big story of the day is Bloomberg reprinting the core of a story in the Nasdaq newsletter by Gittler at BDSwiss that says what is surprising is not the recent drop in the dollar index, which is hardly representative, anyway, but rather the big run up earlier. œBack in April, the recent peak, the dollarâ's real value was the highest œ's been in nearly 18 years. That was the extraordinary move, not the recent decline. The dollar index, which we have long despised for inaccuracy, overweights the euro and underweights the CAD, is down 7.1% from the April week. But the more representative FTSE's dollar index is down by a lesser 3.6%. And this is in line with its historical long-term trading pattern. œ's also in keeping with the huge drop in dollar demand by foreign central banks for dollars under swap lines at the Federal. Bloomberg notes that Gittler joins other strategists, including those at JP Morgan Chase AMCO, pushing back on the intensifying debate over the future of the dollar, including threats of a structural decline voiced by analysts at Goldman Sachs Group Incorporated. Returning to the theme of risk on risk off, it looks like market players simply do not believe the U.S. Congress will fail to get a second œstimulusâ recovery spending package. If so, that would remove one risk-on factor on yesterday's list of scary uncertainties, allowing the dollar to resume its drop. Something that gets little attention is the divergence between sanguine market players see the rising equity markets and even oil and other commodities and central bank officials. We didn't make a list, but statements from various regional feds all indicate they are scared to death of the worst-case scenario: bankruptcies, foreclosures, evictions, etc. Central banks can provide liquidity until the cows come home, but liquidity is not solvency. If we are returning to a strong dollar scenario, it might be because those in the know are starting to influence those with the deep pockets. The discrepancy between economic data and market response is Alice in Wonderland weird. NBSP We continue to think a tipping point has been reached and confidence in economic recovery is following COVID-19 recovery, and that means Germany and Japan. As for the UK, œ's endangering the UK-Japan trade deal over Stilton, which is so British and so dumb the mind boggles. We are sticking to our forecast of a euro drop to the channel bottom and beyond 1.1700 unless we get a rise to the previous high, January 1916 from August 6. For the euro to trade under the 10-day moving average or any other average is meaningful only if it lasts 3-5 days. The clock is ticking. Tidbits: Trump is now talking about cutting the capital gains tax, which would apply to less than 1% of the population. Seems like desperation. We still await Biden's choice of a VP candidate. NBSP This is an excerpt from the Rockefeller Morning Briefing which is far larger, about 10 pages. The briefing has been published every day for over 25 years and represents experienced analysis and insight. The report offers deep background and is not intended to guide FX trading. Rockefeller produces other reports in spot and futures for trading purposes. To get a 2-week trial of the full reports plus trader's advice for only $3.95. Click here. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.